Everybody, we're going to go ahead and get started. Welcome to the retirement workshop with the Office of Pensions. My name is Jackie Stacey. A few things about materials that we have on our website. Our website is delawarepensions.com, and these materials can be found by the link by which you joined. We have the State Employees Pension Plan Summary Plan Description. That's a really good resource if you want to go back and revisit some of the things that we're going to discuss today. You open it up, hit Control and F, and type in whatever it is that you're looking for. I like to use the example of sick leave buy-in because that one's a little bit more complicated. That way you have that resource for you to go and look up anything that you have additional questions on. We have a copy of the presentation as well. And then the Delaware Medicare Assistance Bureau, that's a state of Delaware agency that can help you with your Medicare related questions. Deferred comp, that goes over what happens with your deferred comp when it's time to retire. So we have Voya, and they have great customer service and help over there as well if you have specific questions for them. We have return to work criteria. This recently changed. We're going to talk about it today, but that's just another resource for you. Retirement process information. It goes over what you can expect when it's time to retire, things needed. Definitely a good resource. Member resources is different information that you may or may not need, so just check that out. The flex spending for retirement, that's what happens with your flex spending when you retire, if that's something you participate in as an active employee. Your comprehensive annual statement fact sheet. I'm going to refer to your comprehensive annual statement throughout the presentation, and it just tells you where you can find it and other useful information. And then the insurance rate tables, they are also on our website, and it is the current rate tables for insurance. We do have a Deepers app. You don't need to hurry and try to scan the QR code right now, but it is available on our website, and it can give you push notifications. You can do a countdown to retirement. So if that's something you're interested in, it's available. Now we're going to talk about statistics. So these statistics are as of June 30th, 2024. We have 40,526 retirees, including terminated vested from all 9 plans. And then 35,715 are from the state employees pension plan. So that's the plan that we're talking about today. That is the biggest plan that we administer in our office. You'll also hear it called SEP. There's 46,075 active members in all 9 plans, and 39,412 are in SEP. We have over $13.6 billion in the Delaware Public Employees Retirement System. That's 8 pension plans, 1 length of service award plan, 3 post-retirement trusts, and 1 investment pool made up of 3 entities. There are assets of $11.8 billion in SEP and approximately 88% funding ratio for SEP. So what does that mean? If the state were to close today, 88% would come from the pension fund. The remaining up to 100 fund would then come from the general fund. So if you ever do a quick search on the internet, you'll see that Delaware is high up on the states for funding. So that's great for all of us. We're really well funded. You may see, other states aren't as great. So that's something that we're really proud of, and it's exciting for everybody. Pension contributions. So if you were first hired into a pension credit position prior to 1/1/2012, there is a 3% contribution deducted after the first $6,000 of earnings each calendar year. So you'll notice in the beginning of the year that your paycheck is a little bit higher. That's because that contribution doesn't start coming out until after your first $6,000 of earnings. When we say first hired into a pension creditable position, that's when you were hired into a merit position. Reason why we kind of want to talk about that is casual seasonal time does not apply toward your pension service. So some people might get confused, you get your 10-year award letter, but if 2 of those years were casual seasonal, you really only have that 8 years of pension credible service. For those that were first hired into a pension credited position on or after 1/1/2012, it's a 5% contribution. And again, that is deducted after the first $6,000 of earnings. For our correctional officers or specified peace officers, it's a 7% contribution. And then your employer also contributes to the pension. So for fiscal year 2026, it was 12.38% of your salary. Now we're going to talk about eligibility. When can I retire? So for our first is unreduced service pension. It's also known as a full service pension, and this is for our active employees. If you were first hired into a pension credit position prior to 1/1/2012, you can have 30 years of pension credit service at any age. You can be age 60 with at least 15 years of pension credited service, and then age 62 with at least 5 consecutive years of pension credited service. For those that were first hired into a pension credit position on or after 1/1/2012, you again have that 30 years of age or 30 years of service at any age 60 with at least 20 years of pension credited service, or age 65 with 10 years of pension credited service, with 5 being consecutive. For our correctional officers or specified peace officers, 25 years of pension credit service at any age, with 20 years as a correctional officer or specified peace officer, 5 being consecutive, and you do have to retire out of that specified job code as the correctional officer or specified peace officer. Now we're going to talk about a reduced service or a reduced age pension. It's also known as early retirement, and this is for our active employees. You can retire 25 years of pension credited service at any age, or age 55 with at least 15 years of pension credited service. If you happen to fall into both categories, we're going to do what's most beneficial to you, whatever's going to give you the least amount of reduction. We're also going to look at the calculator in a little bit. So if this is something that applies to you, you plug in your numbers on the calculator, it's going to show you that reduction factor for you. And it'll also show you the different, well, I guess your amount if you would to stay for a full service pension. So that calculator is really helpful. You don't have to figure out that reduction with a pen and piece of paper because that calculator will do it for you. But the math behind it, if you were first hired prior to 1/1/2012 for your reduced service pension, it's going to be reduced by 0.2% for each month short of 30 years. For your reduced age pension, it's going to be reduced by 0.2% for each month under age 60. If you were hired on or after 1/1/2012, that reduction factor goes up a little bit. For your reduced service pension, it's going to be reduced by 0.4% for each month short of 30 years. And then for your reduced age pension, it's going to be reduced by 0.4% for each month under age 60. Now we're going to talk about a vested pension. So this is for individuals that are leaving state of Delaware employment, but are not yet eligible to retire, but they meet eligibility to vest their pension. So an example of that would be if you're 40 years old and you have 12 years of pension credit service. Let's say, you're moving to Florida. You could vest your pension and then begin collecting it at a later date. For those that were first hired prior to 1/1/2012, you have to have 5 consecutive years of pension credit service, and then your pension would be effective the first of the month following your 62nd birthday. For those that were first hired into a pension credit position on or after 1/1/2012, you have to have 10 years of pension credit service, 5 being consecutive, and then your pension would be effective the first of the month following your 65th birthday. If this applies to you or this happens, our office will reach out to you about 6 months prior to you being able to begin collecting your pension and get you all the paperwork you need and things like that. Now, just keep in mind that if you do move, just keep us updated with your address because, you know, we're not the FBI. We'll try to find you, but just keep your address updated. That way you get those communications. Unified pension. So you may combine service in the following pension plans with service and SEP, provided you're not collecting a pension from them. County Municipal General Employees Plan, the new State Police Plan, County Municipal Police and Firefighters Plan, and the Judicial Plan. If this applies to you, I do encourage you to call our office and speak with a subject matter expert so they can look at the whole picture with you. Buying options upon retirement. So you may or may not have heard of these. Some people may have some people may have one, some people may have more. You're not obligated to purchase them. It's a decision that you'll make at retirement. Purchasing them would increase your service time, which would then increase your pension. So let's talk about what they are. An approved medical or personal leave of absence. So an example of this would be, let's say in 1999, you broke your leg. You were out for 6 weeks and 2 weeks were unpaid. At the time of retirement, those 2 weeks of unpaid status, you could purchase at retirement, which would increase your service time, which would increase your pension. So common questions we get with this is, what about STD? What about long-term disability, short-term disability, long-term disability, parental leave, FMLA? The key to this one is if you're in a paid status, you're getting service credit. So it's when you're in that unpaid status that this would apply. Sick leave. So I'm going to tell you the definition for sick leave, but don't get too hung up on it because it's complicated, but we have that calculator that I was talking about earlier that will figure it out for you. So you'll plug in a number and it's going to do all the math for you, but we kind of like to let you know I guess the math behind it essentially. And also remember, I was talking about the summary plan description on the website. You can go in there, definitions right there, so you don't have to try to scribble it down right now. So our sick leave is, you're typically going to be compensated by your organization for up to 90 days or 675 hours of sick leave at half the daily rate. For every 21 days beyond that 90 days is 1 month of sick leave you could purchase at retirement for a maximum of 1 year. Just keep in mind, some agencies and school districts may have different specification. This is just a generalized idea, so you'll want to contact your either human resources or payroll department to work out if they do it any differently. Actuarial. So actuarial is military service prior to coming to the state of Delaware, or other governmental experience, such as working for, we'll say, the state of New Jersey. This is also on the calculator. It's not our most popular buy-in, and you'll see why when we get to the calculator, but it is an option. And then any buy-in options must be approved and or verified by our office prior to retirement. So payment for eligible buy-ins. If you do have buy-ins available to you, you're not going to know the exact cost until retirement. However, that calculator will help you out. You'll receive written notification to your home address the month that you're receiving your first pension benefit. And it does have to be paid prior to the issuance of your first benefit if you decide to purchase it. And it's going to tell you what your buy-ins are, how much they cost, how much it would increase your pension if you were to purchase it, and then the recoupment period. And you can purchase them one of 3 ways. You can have them deducted from the first monthly pension if it's sufficient to cover the entire cost, personal check, or rollover from a qualified tax sheltered account, a 401A, a 457B, a 403B, or an IRA. If you participate in Voya, you can contact Voya if that's something, if you want to use Voya to purchase your buy-in. Payment for leave accruals, you are, or you may be entitled to payment for sick and annual leave accruals. That payment is made by organization. So our office does not make that payment. So you would want to contact your human resources or payroll department for your entitlement, your estimated payoff amount and date to expect payment. You can have it deferred into your deferred comp account. If that's something you want to do, you want to make sure you reach out to your human resources or payroll at least a month prior to your retirement, so all the paperwork can get handled. All right, now we're going to talk about survivors. So who is an eligible survivor? If you don't have survivors, we're going to talk about what that picture looks like shortly. So a survivor is a person eligible to receive a monthly pension at the time of the active member or pensioner's death. So as an active member, if you have 5 years of pension credit service and you were to pass away and you have a survivor, and we're going to talk about who our survivors are in a minute, then they would begin collecting a survivor's pension. And it'd be 75% of what you would have been eligible to receive at retirement. So your survivors are your spouse, your child or children under the age of 18, unmarried, and if they're between the ages of 18 and 22, they have to be a full-time student. A child that was permanently disabled as a result of a disability that began before the child attained age 18. If that child is institutionalized, they do have to be claimed as dependents on the member's federal tax return. And then your dependent parents, and they also have to be claimed as dependents on the federal tax return. Now, this is an order that is established by law. We have had individuals call in and say, well, if I pass away, I don't want my spouse to get anything. Well, you would either need to get divorced, or we have what's called a survivor order of priority form on our website, and you could change the order of priority. Might help, might not, depending on your situation. So just some things to keep in mind. At retirement, you are going to elect how much you would want to leave your survivor in the event of your death. So you do have to make an election, even if you don't have a survivor. And it's a one-time irrevocable decision. So what that means is, let's say you elect to leave your survivor 100%, it's your spouse, and they predecease you, you then can't go change it to a different percentage. It's a lifetime reduction. Let's talk about the reverse. Let's say you don't have any survivors, so you elect the 50% option because it's no reduction to your pension benefit, and you go on a cruise, meet the love of your life, and get married. You then can't go change it to a different percentage. The reductions are also shown on the calculator, so you'll see what that looks like as well. Beneficiaries. So this is what happens when we don't have a survivor and you were to pass away. I'm going to read you the definition, and then we're going to kind of talk about it. So a beneficiary is named on the pension contribution designation change of beneficiary form and receives a lump sum distribution of the balance of member paid pension contributions plus interest in the event there's no eligible survivor at the time of the member's death. So if you were to pass away, or if you're an active employee and you have less than 5 years of pension credited service and you were to pass away, your beneficiaries would receive your contributions plus interest. So who are your beneficiaries? If you go on your annual statement, you can see who you have listed as a beneficiary. If you need to change it, the annual statement tells you how to change it as well. Now, if you haven't looked at your annual statement for a long time, we do encourage you to look at your annual statement, because let's say if you were to pass away, there's an ex-spouse listed, you don't have survivors, that ex-spouse is going to receive those contributions plus interest. So make sure you go and see who you have listed as a beneficiary. Excuse me. This is our calculator. So I had mentioned our website, DelawarePensions.com. You go on here and you click the pension calculator button. These are the different calculators that we have available. So you're going to select the one that applies to you. All you do is click. And then this is an example. So it is helpful to have your annual statement with you when doing this, and there's instructions on how to access your annual statement. And then on the right-hand side, you're going to see instructions on where you're going to enter the numbers, or where you'll find the numbers essentially. So you're going to enter 1, 200,000, enter 2 for your credible service prior to January 1st, 97. So for this example, it's 2 years. Credible service after 1996. This individual is 21 years. Additional service beyond your annual statement. So you can use this a couple of ways. Your annual statement is through December 31st of the prior year. So essentially we're in November now. You could do, 11 months to get a more accurate as, what it looks like today. Or let's say you're planning and, you want to look 2 years out. You could do 2 years to get a more accurate estimate. And then your age at retirement. So this example is 55. So that means they're 55 with 23 years of pension credit and service. So guess what? They're in early retirement. And this is where it shows you. So I had mentioned if you are eligible for an early retirement, it's going to show you those numbers. And then it's also going to show you what it would look like if you were to go full retirement. And then you'll see your 4 different survivor options, so that if you choose anything other than the 50%, it shows you what that reduction would look like. And here's our sick leave buy-in. I had mentioned it earlier. I know it was a complicated definition, but all you have to do here is select the hours per week you work, so 37.5 or 40, and then how much sick leave you have at retirement. So this individual has 1,250, and then they're going to estimate the sick leave buy-in. The box at the bottom is going to populate. So they have 3 months available to purchase. It would cost them a little over $833 and would increase their monthly pension by a little bit over $25. It then shows their updated benefit amount, and then the years to recoup is 2.7. So definitely a handy tool to help you with those sick leave buy-ins. Now, if you don't have enough sick time, it's not going to populate anything for you. So let's say you have 10 days. Well, you'll get paid for 5 are a wash, to go away. You don't have enough time for a sick leave buy-in. And then our actuarial buy-in, just as a reminder, this is military service prior to coming to the state of Delaware, or other governmental experience. So federal government, working for the state of Maine. You're going to select your age at retirement. So we said this individual is 55. They're going to click the estimate button, and it's going to populate the bottom box. So the cost to purchase 1 year is over $15,000. It would increase their pension by a little over $102. Shows you the updated benefit amount, and the years to recoup is 2.5, a little bit over 12.5 years. So not our most popular buy-in, but this is something that you will address at retirement if it applies to you. Burial benefit. So this is a $7,000 benefit. It's of no cost to the pensioner, and you do designate beneficiaries. So these beneficiaries are different than the beneficiaries that we spoke about earlier. And the payment is taxable, so it is considered income. So whomever you do leave it to will have to pay taxes on it or claim it at tax time. Everybody's situation is a little bit different. You can leave it to a funeral home. If you decide to leave it to a funeral home, you're going to want to set that up with the funeral home prior to doing so and get a tax identification number. If you do decide to leave it to a funeral home, you just want to make sure that you let your loved ones know, because if you list XYZ and it goes to ABC. It's going to create a lot of headache for your loved ones. And then one thing we like to clear up about this is you do have to be in a retired status for this to be a benefit. So if you're on LTD, you're not in a retired status, so this would not be something available for you. Health insurance. So you must be collecting a monthly pension or LTD benefit. All plans are coupled with prescription plan coverage. Changes in coverage occur once a year during the open enrollment period in May, and those changes are effective July 1st. So same as an active employee, you have open enrollment. If you're Medicare eligible, open enrollment period is in October, and those changes are effective January 1st. If you have a life-changing event, changes must be done within 30 days of the event. So you get married, get divorced, have a child, those are all life-changing events, and you can make changes at that time. If you are eligible for double state share, there is premium info on Statewide Benefits website, and you can go there and look at the different, I guess, options. If you have questions about health insurance, I do encourage you to give our office a call. We have a great group of health insurance team here, and they will be able to help you. It can be complicated. We understand that. So just give us a call if there's something you're unsure of. So how much is health insurance going to cost me at retirement? So health benefits are available with the state share paid by the state of Delaware for members first hired prior to 1/7/1991, disability, pensioners, and members on long-term disability. So if you were to pull up our rate sheet and you're looking at the rate sheet, if this applies to you, whatever plan you select, pensioner pays column, that's what you would be paying for health insurance for these individuals. Next set of individuals are for members first hired on or after 7/1/91 through 12/31/06. So if you're looking at that rate sheet, less than 10 years of credited service, 0%. So you would pay 100% of that center column plus the pensioner pays column. 10 years to 14 years and 11 months, 50%. So 50% of that center column plus the pensioner pays column. 15 years to 19 years and 11 months, 75%. So 25% of that center column plus the pensioner pays column, and then at least 20 years, 100% of that center column would be paid. So you would only be responsible for that right-handed column, the pensioner pays column. Our next set of individuals are for members first hired on or after 1/1/07, less than 15 years of credited service, 0%. So 100% of that center column plus the pensioner pays column. 15 years to 17 years and 5 months, 50%. So 50% of that center column plus pensioner pays column. 17 years, 6 months to 19 years and 11 months, 75%. So 25% of that center column plus the pensioner pays column. And then at least 20 years, 100%. So 100% of that center column plus the pensioner pays column. Did I say 100%? If I said 100%, 100% is covered, so it would only be that right-handed column, the pensioner pays column. So one thing to take away from this is, let's say you have 19 years and 6 months. You're going to want to work that additional 6 months, if you can, obviously, to get that 20 years to get that health insurance rate. There is another tier. It's for those that are first hired on or after 1/1/2025. Not going to dig into this one because they won't be able to retire anytime soon. This is just an example of kind of paint the picture of how much it can cost you depending on your years of service. So our first individual was hired January 1st, 1986, and they have 15 years of service. So they're going to take, and they're choosing the individual and spouse for the high mark PPO. So they're going to take that center column times 0% is 0. So they will pay $343 per month for health insurance. Then our next individual was hired January 1st, 2003. They also have 15 years of service. They're going to take that center column to 2,247 times 25%. That'd be 561 plus the pensioner pays column, 905 per month. And then our last example is hired January 1st, 2007. They're retiring with 15 years of service. They're going to take that center column times 50% plus the pensioner pays column. So that's 1,467 per month for health insurance. So it's definitely important to plan out when it in general, but when it comes to health insurance, just be aware of the costs. And again, if you have questions, our team is more than happy to help you with those questions. Medicare coverage. So Medicare Part A and Part B enrollment is required for all pensioners and their eligible insured dependents when they attain Medicare eligibility, either due to disability or age 65. So Medicare Part A is your federal hospital insurance. So you want to enroll in that at 65. Part B is your federal medical insurance, such as doctors and supplies. You don't have to enroll in that until you no longer have active employer coverage. So that means, when you retire, you would want to go to Medicare at least, 3 months prior to your effective date to sign up for Part B. A common question we get with this one is, what about my spouse? If they are covered through an employer, like say they're working, I don't know, we'll say for Walmart, and they're covered through Walmart, they're 65, they don't have to apply for Part B until they're no longer under that active employer health coverage. So Medicare covers about 80% of your healthcare cost. The state of Delaware, as a pensioner, you have the option to enroll in a special medical plan with or without prescription option. So that would cover the remaining 20%. It is a qualified and enhanced Part D prescription plan, and you can only have one Plan D enrollment, except if you have TRICARE. So you'll start getting things in the mail at 65. Hey, Part D, that kind of stuff. You can, if you're enrolled under the state, you can't enroll under another plan. And then if you have questions, I know I said it a lot, but you can call our office for help, because it is a lot of information. So your dental and vision insurance, it is available at retirement, and it is automatically payroll deducted if you decide to enroll. So it mirrors the same plans as active employees. So your Dominion National, your Delta Dental, and IMED. Your health insurance is also automatically payroll deducted as well. If you have a life-changing event, you can make changes within 30 days of that event. If you work for a school district and get a stipend, that stipend is no longer available at retirement. So just something to keep in mind. Active member benefits. So Securian Financial, it is available to eligible active members who want to maintain group universal life after retirement, and those premiums must be paid directly to Securian. So if that's something you want to continue when you retire, you do have to contact Securian directly. Your flexible spending account, per IRS tax code, there is no provision for retirees to participate, and the benefits terminate the effective date of retirement or the date of your last FSA payroll deduction. There's also that information sheet on our website you can read as well. And then your deferred comp accounts, your final check is the last time you can contribute to the account. So you'll want to reach out to Voya to find out what your options are with that Voya account. Direct deposit. So it is mandatory for your monthly pension, and it is deposited on the last business day of each month. You will fill out a new direct deposit form, so you can attach a copy of a voided check if you so choose. If not, just make sure you write clearly, because I know I don't want my money going into the wrong account, and I'm sure you don't want your money going into the wrong account. So just make sure we can read it. Taxes. So the monthly pension is taxable by the federal government, and it may or may not be taxable in the state where the retiree maintains permanent residence. So if you're moving outside of the state of Delaware, you'll want to contact that state to find out what your tax obligations may be. And then at tax time, you're going to get a Form 1099-R. You will get a W-4, if you retire mid-year, for example, let's say you retire in June, you're going to get a W-4 from your employer for that time, and then you'll get a 1099-R for your retirement time. With your tax forms, you do have to fill out new tax forms. Unfortunately, our office cannot give you any tax advice on exemptions or anything like that, so you'll want to contact a tax professional if you need assistance with that. Payment of monthly pension. So your first pension check is going to be on a 1 month lag. Since we're on lag payroll, you're going to be on lag pension. What does that mean? So if you retire June 1st, you're going to receive your first check July 31st. It will be double pay and double deduction. So it's going to be June and July's payment, and then any deductions for June and July. After that, you're going to receive your pension check on the last business day of each month. Your monthly pension is calculated after the receipt of your final pay from your organization. So once we receive what your final pay was, that's when we'll calculate your exact amount. You're not going to know the exact amount of your pension until you retire. But that's what the calculator is for, to kind of help, gear you and prepare you for an estimated benefit. Online pay devices. So just like you can as an active employee look at your paycheck, you'll be able to look at your retiree statements online as well. You'll get a letter in the mail explaining to you how to set that account up. Post-retirement increases. So those are pension increases received after retirement. They are granted upon legislative approval. And then there's different examples of the last PRIs that were approved. Okay, working after retirement. So this is kind of a lot of information, but we do have a section should this come up in your situation. And we also have the website with a lot of good information on there as well. And this did recently change, so it's different than it was a couple months ago, I guess. So if you're under the age of 59 and a half, you must have a bona fide separation of at least 3 months. If you're over 59 and a half, a bona fide separation is not required, either of the above, and you must be in a non-pension covered position. Keep in mind that some part-time and temporary positions are pension credible, so you want to verify that with the HR for that position. And this only applies if you're considering employment with an organization participating in the state employees pension plan. So you can go work at Rita's, at Walmart. It's only if you're considering coming back to the state employees pension plan. Some additional precautions. Some part-time and temporary positions are pension credible. Mentioned that on the previous slide. You'll want to check with the HR department for guidance regarding those positions. The employer may not classify the position to temporary to accommodate your return to employment. This is considered fraudulent by both the state of Delaware and the IRS. Pre-arrangement, if both the employer and employee know at the time of retirement that the employee will, within reasonable certainty, continue to perform service for the employer. A termination of employment has not occurred upon retirement, and that employee has not legitimately retired. In these cases where there is no bona fide separation, your pension will be stopped for the duration of this employment. If you accept a pension credible position with the state of Delaware after retirement, your pension and all associated benefits, including health, dental, vision, and RX, will cease until you retire for a second time. And the calculation for that second time is your first frozen pension, any PRIs, your second pension, and that would give you your new pension amount. Keep in mind, if you are receiving Social Security benefit, earnings limits may apply, and so that would be a question for Social Security. So Generally, you cannot work for an employer who participates in the Delaware State Employees Pension Plan and continue to receive your monthly pension, as well as participate in the pensions group health insurance. As part of signing your pension application when you retire, page 3 contains all this same information and requires a retiring member to sign as acknowledgement that you understand the guidelines. When you are signing the pension application, the information is provided and it is required that you sign the paperwork and acknowledge and understand the guidelines. Why is it so critical? Not following these guidelines jeopardizes the entire membership. So the IRS could take away the 401A rating, the pre-tax would go away, and then it would create a requirement to pay all taxes on contributions made since 1993. And if you do call our office in regards to returning to work, just make sure that you have contacted the HR for that position prior to calling our office, so that we can give you the proper guidance. So, are you ready for retirement? Written notification to your supervisor and human resources is needed 4 months prior to retirement. If you don't give 4 months, that doesn't necessarily mean you can't retire. It just means you may see an additional lag in receiving your first pension benefit, as well as a lag in healthcare. So if you can give 4 months, great. If you can give more, that's even better. We do have a pathway to retirement on our website. You can visit that. It kind of gives you guidelines on things you want to do in order to prepare for a retirement. As the member, you do want to gather your required personal documents for yourself, your spouse, and any eligible dependents. Birth verification, signed Social Security card. Please make sure it is signed or we cannot use it. Marriage verification, divorce verification, and if you are on Medicare, your Medicare card. For your birth verification, marriage, divorce, if you have a driver's license with a gold star in the top right-hand corner and your driver's license matches what's on your Social Security card, we don't need, all your marriage verifications, birth certificate, divorce decree. Unless you are covering your spouse on health insurance, then we do need that marriage verification. After you retire, our office will maintain your records. So essentially we become your HR. Any updates must be in writing with a signature for your name and address. We do have a change of address form on our website. Other personal information, if you update your information on your Okta account, you must still submit your updates in writing. So your Okta account is where you'll access your pension statements. If you update anything in there, the systems don't talk, and we still need that signature for those updates to help with fraud and all that kind of good stuff. And we are available to answer any questions or concerns. There's a lot of information. People do attend our workshops more than once just because there is so much information. But again, we have great resources here. You can call us. And then that summary plan description, great resource for you as well. If you just want to search it up and, have a specific question that you think might be in there, I highly encourage you to look at that as well. And this is our contact information. So Delaware Pensions, our email address, phone number, office address. And that is it. I want to thank you for attending this presentation and good luck.